Hello, investor and trader. Welcome back to another episode of Swing Trading Ideas Part 4. So today I bought two new stocks towards my swing trade position on my small little public account that I want to share with you guys. After that, I'd like to cover the whole entire process, how to find these stocks to swing trade, because I got one of the comments about that and I thought that was a good question. So I want to share you guys my thought process from my phone to my laptop, because I use both. So let's just get straight into it. So Johnson and Johnson, I've been watching this stock since it was at the 50 daily EMA, um, but I haven't decided to buy it yet because you notice something over here. It's at 180 down to 170. That's only $10 drop, which is like around what, less than 10%, 5% drop. It got my attention, but I don't want to buy it yet. But now it's getting near the price of interest I like. And remember, one of my criteria is right here, right? That I post a while back on almost every single video, how I swing trade. It lands right on this key level right here, 200 EMA. The 200 is a sweet spot for me at least, right? All these solid blue chip company. So Johnson and Johnson, I purchased 10 shares today. Initial entry. So this is the public account, which is the YouTube account now that I show and how I built the account up. So the stuff in yellow is what I bought today. Notice MGen and B and Bristol Myers is highlighted in yellow. I have no idea why it's in yellow because I did not do anything to the stock. At first I thought they issued dividends because these two stock issues dividend. If you pay attention to your account on Fidelity, when the stock issue dividend, your thing turns yellow for the day and they show you fractional shares. But today I don't think it's a dividend date, so I have no idea why it's yellow, and I didn't buy anything today. It's the same positions. Anyway, so Johnson and Johnson, I bought 10 shares, pretty much at 166. My finger was so itchy that I need to get in. I did. I got in 10 shares, small position. Remember, the entry position is always small. It's like if you want to buy 100 shares, buy like 10 shares or 15 shares or 20 shares, but don't buy more than that. You need to give room for error. The way I swing trade is like me investing, but on a smaller time frame, because investing is more like buying for 3 years or to 5 years or 10 years or hold forever, right? By the way, when you're investing, you don't want to buy all one price at one time, right? You buy by increment. These support or these key level support going to act as buying opportunity, right? Buy some here, buy some here as the stock falls, buy some here as the stock falls, buy some here as the stock falls, so on and so on. And now if the stock goes way below all these moving averages like it did right here, like BMY for instance, see, it's below, right? All the moving averages, what do? You zoom out to the weekly and then repeat the process. Voila! You buy some here, you buy some here, you buy some here, so on and so on. That's how you invest. Well, that's how I swing trade too. There's no difference. The only difference is swing trade, I just hold it for a week, next day or 2 days, or next month or next quarter, and I sell. Just, instead of investing, the same thing. So, Johnson and Johnson. So I bought some right here already, right? Pretty much 166. So am I gonna buy next right here? Absolutely not. You could if you want, but for me, no. Why? It's too close to my entry. I like to be down at least 5 or 10% of my initial entry. Then I will buy another 20 shares instead of 10 shares. I size up a little bit as the stocks fall. So then you zoom out, right? Let's go to 5 years. See a bigger time frame. We can clearly see Johnson & Johnson that once in a while it hits this yellow moving average, which is the 150 weekly EMA. I do not use SMA, I use EMA simply because it's more price sensitive, it's more react to the EMA instead of SMA. That's just my personal opinion. Either one SMA or EMA doesn't matter, it's the same thing in a way. So you notice here, once in a while or a couple months, it tends to fall, right? Retracement, impulse, retracement, land right back on the yellow moving average, impulse, retracement, impulse, retracement, fake artificial crash, and then impulse, retrace. You see how the stock move impulse up and down, right? So now it's doing the retracement. So the next key level is right here. The weekly, again, I'd rather remind the viewers, this is the weekly. So the next key level is right here around 163, 162. Am I going to buy some right here? Most likely not, because 162 is kind of near 166, my initial, right? I would love to buy more down here at 155 or 150. Will it hit it? Absolutely. If the stock market decides to pull back, which is kind of doing right now, no doubt this stock can fall. Notice here, the stochastic is 41. It's not in the 30s or 20s yet like it did right here, you see? So therefore, there are more to the downside. You may ask, then why the hell you jump in at 166? Well, there are several reasons. The first reason is now I have that in my account, so therefore I'm not gonna forget about it, right? So I'm gonna watch it over time. So when this percentage down 5, 10, 20%, I would love to buy some more. I don't think a down 20% though, because that's a little too much, but I think 10% is reasonable. Next up, KBSF. So KBSF is a penny stock from China. It's a fashion company. I've been trading this stock, swing trade, off and on over the years. So I'm very comfortable with this stock. If you're not comfortable, I would not recommend it because this stock is pretty wild. That's why I decided to trade. It's pretty fun. If you notice here in KBSF on the daily chart for the past 6 months, see all these random spikes, right? Out of nowhere sometimes, it just spikes because it's known as short squeeze. This stock is very low float. Look at the volume. It's only 50K today. I mean, even my whole account, I could buy 50K if I want. The whole entire day, just my buying. I'm not just kidding, but you get the idea, right? The volume is extremely low. So sometime when this stock, just spike like this, people are shorting it, and it's known as a little short squeeze. You can capitalize that by buying ahead of time. So every once in a while, the stock lands below or near the 200 EMA, like it did right here for the past 6 months. I will buy some, then I will set a sell order good until cancel. I'm not going to sit there and babysit this because this stock spiked randomly. But now that since I'm in the stock, I would, have it on my watch list now, right? But I already have a sell order right here. My sell order is at 420, like right here. Good until cancel. What does that mean? That means that when the stock price spikes the next day, it will automatically trigger my order in that intraday if it hits it. Pre-market doesn't count. After-market doesn't count. But at least that it spiked, I will get out and lock in like $400 or $500 without me even noticing. Now this is pretty, for me on the side for fun. Okay, so how do I find these stocks to trade? Well, it's very, very simple. Every single day when the market closes, I like to go to Yahoo Finance, and it's free. You don't have to pay any of these sources that I'm about to show you guys. So I will go to Yahoo Finance. I will go down to here, and I look for the biggest loser, not the gainers, but the loser. It's all up to your strategy. I like to look at the losers. And then I will click on it. And then it will give me a bunch of stocks that losers today. Then give me this list. Okay, here I have several criterias. First criteria, PE ratio. It has to be below 20 or near 20, my preference. Next criteria, market cap. The bigger the market cap, the better. Why? Because big market cap like 30 billion, 50 billion, 100 billion, a lot of institutional own those stock. So that means individual investors like you and I cannot manipulate the stock like penny stocks, because penny stock is about price action. Big blue chips is all about fundamentals, if you haven't noticed that. So the bigger the market cap, the better. Next, I look at the percentage down. The bigger the percentage down, the better. Price, I don't really care about the price. Any price is fine with me. Okay, so that's what I do every single day. Like, for example, right? Today I found one stock. Let me look at it real quick. It's on like the last page or near the last page. It's like NUE, I think. So I look at the PE ratio. This is kind of too high. One more notice on the side. Banks PE ratio tend to have a low PE ratio, like around 10 or 15. So you have to be aware of that. Okay, tech stocks tend to have a higher PE ratio, all the way up to the hundreds, even thousands, which is pretty risky, but they're all fun to trade because they make bigger move. these these lower P ratio don't make that much move. That's why it's safe to trade in a way. And yeah, that's why my success rate is pretty high, because I don't trade those risky high flying stock. All right, where's that one stock? It's NU something. Oh, there it is right here. NUE. Notice the PE ratio is around at 10, which is pretty low. So then I would click on it and see what other metric that they have. So this stock pay a little dividend. That's cute. It's a 32 billion company, which is pretty good size, not big, not little, in the middle. And then I look at the 1 year to see is it uptrend or is it a downtrend. Okay, it's clearly uptrend, and then I go to the max. Is it uptrend or is it a downtrend? How long has it been in public for trading? It's been trading since the 1980s, so that's good. That's good. I don't like IPOs, and you know this right here. Where's the criteria? Avoid hype and parabolic and IPO. That's my criteria. Remember, this is like 90% success rate of winning. So you need to factor out all the garbage stuff, right? I'm not saying most companies are IPO are garbage, but I'm just saying you have to be very, very selective in order to get a 90% success rate. Okay, so it's clearly an uptrend. Next step I do is, okay, this is just pretty much, glance through it. Now let's go to the a little bit more fundamental. So the next thing I go to is Finviz. It's free. You don't have to pay for the service. Type in NYU, sorry, NUE, and then I will look at this metric right here. So it's in the S&P. Okay, that's good. So if I'm in this stock, I need to watch the S&P. Is a S&P overpriced? S&P, underpriced? So on and so on. Is a S&P pullback? Whatever, right? Because if the S&P goes down, most likely this stock will go down with it. So you have to be aware of that. And then I look at of course, the forward PE, which is 9, not bad. The PEG ratio, not bad. PS, not bad. All these are pretty decent numbers. Next 5 years, not bad. Notice I haven't done anything but fundamentals. I just looked through the glance the metric, right? It looks pretty good, right? It looks pretty decent. Now, next step I look for is down here, the share dilution. Okay, it's buying back a little bit of shares, which is good. So this company not so bad. And then, all right, the next step is I'll add this to my watch list. Just the stock is down doesn't mean I'm gonna buy. You have to watch it. So the next step, I add it to my watch list. So my watch list is on my phone. So I screenshot my phone. It looks like that on the main page of my phone. Yes, it's pretty damn hot in Redlands where I live. So I use Yahoo Finance, I use Stock Tracker, and I use Investing app. I use more app too, but these are the main 3 apps that I always use every single day. So I added this stock right here, NUE, to my stock tracker right here. So inside the stock tracker, it looks like this if you open up the app. You can download it. It's free. It doesn't cost you. You can buy the service you like, but I don't buy anything. Mine's free. So you can list all these stocks in categories or criteria, what do you want to call it. I name it, my stock, penny stock, my position, group, whatever you want to name it, doesn't matter. Add it in here. Over time, this list will grow pretty big. As you can see, I have like hundreds of stocks, right? Because over time, it adds up as you add your stock to your watch list. So I will add that stock like somewhere down here because it's a new stock. So let me open one of the stock criteria so you can see what it looks like. So I'm gonna open value investing. I have 41 stock inside value investing that I think is value. So let me open that picture up to show you what's inside. Okay, so this is inside value investing looks like. See, value investing. So I have PRU, CRM, HD, MA. There's a bunch of blue chip company that I would watch over time. I think I have one more picture right here. Yep, here's some more valuable stock. Now these are my value stock, not yours, right? You can have your own value stock, whatever fits your criteria. Just add it in. And what I do is every day I will watch these numbers. What the most down will get my attention. And then what I do after that, well, it's very simple. After that, I will go to the chart, right? The technical. Okay, let's go here or here. Since I'm on my laptop right now, I don't use my platform. But when I am away from my laptop, I use the Yahoo app. That's why I have this right here. Okay, so NUE. Okay, now the first thing I noticed here that I noticed on the technical standpoint, stochastic is slightly sloping up, but not quite. RSI is still sloping down. Land right on the 50 EMA. Notice the wick right here. See the little wick right there? Buyer is pushing it up. You can see right here on the intraday, right here, where it lands like around 107, it got pushed up. So that's why the daily has a little wick tail right there, which is good. That means buyer are stepping in around the 50 EMA on the daily. But I think it could go a little bit lower. I'd like to go a little bit lower. If you notice here, if we go to year to date, there's another criteria I look for. Year to date. So beginning of the year, this stock is 50 bucks, right? Near 50. Right now it's 109. What does that mean? Dude, that's 100% gain in 1 year. That's a lot of gain. So therefore, this stock can go down even down to here, right? Bit more reasonable, because not every stock double its year. You need to ask yourself, had this stock revenue, profit margin, blah blah blah, all the fundamental double? Of course not, because stock tend to go up and down over time. Sometimes it's overvalued, sometimes it's undervalued, so on and so on, right? Like swing trading is no different than investing. I think I covered that earlier. When I buy a swing trade, I buy an increment. So I think this could go a little bit lower. Now let's look at the weekly real quick to see what we get. Okay, let's go to a bigger, closer time frame. We notice here since January of this year, the stock tend to hover below or slightly above this 6 weekly EMA, which is the white EMA line right here that I have. But now here it broke and lands right on the 20 EMA. Notice here it's below the white EMA with the 6 EMA now, right? So we have to go down to here, which is 102, 103. So that's my next price of interest. I'm going to be watching the stock to see if it hits 102 or 103. I'm pretty sure it will. It's only like a couple dollars away. Now that price range will be around right here. And then I will maybe buy some right here, maybe not. I like to buy some down here though, because I think this stock has more to give. Now remember, not all stock double its price in 1 year. You must understand, a growth stock like that, that's an insane amount of growth. If you look at the PE ratio for this stock, it's only 10. 10 PE ratio should not double its value, double its stock price in 1 year. So therefore, this stock is significantly overvalued. It could fall all the way down to here and then gonna bounce a little bit. So I'll be watching this. So now, when I am away from my laptop, I use the app, which is the Yahoo Finance app. Let me open it. So inside the Yahoo Finance app, it looks like this. So here's an example of LMT, which I made this drawing today for my chat group to alert them, hey, LMT is getting attractive. So this is inside the Yahoo Finance chart. Notice right here that there's a monthly chart. Notice since 2019, like 3 years ago, once in a while, this stock, LMT, hits the monthly 50 EMA and it bounces. It did right there. It did again right here during the Corona crash. And it did right here earlier this year, right? Now look, it's going back to that again. So that's why I have the price draw right there. Or watch this price around 338 or whatever. So let's go to here on a better picture, LMNT, and go to the monthly. Well, first of all, let's go to the daily. Notice the daily, it busts through all the moving averages and it's still sloping down right here. Okay, that's good, that's good. So we have to zoom out to the weekly. See landing near key level support, and it does. See right here, the red EMA. Let's go to the 5-year. Maybe see a better picture. See, once in a while, 19 and 20 and earlier this year, it hits this red weekly EMA. It's kind of retesting it. Now it's doing it back again. Then if we go to the monthly, we can see that again right here, right? So therefore, around around this price range, prefer 330 or around 330-ish is a good time to start a position. On top of that, you go back here, the previous, look at all this price action early the year, right? Around 330. So 330 would not be a bad price to start a small position. Kind of like a tracker stock. So if you want to buy 10 share, buy like 1 share or 2 share. So that way you have in your account, you won't forget it. And as the stock goes down, you slowly build your position. So that's the next trading idea, LMNT. I just covered Johnson and Johnson, so I want to cover one more stock that I recently got a comment about. He asking me how do I minimize my loss. Now, bro, this is for you. So he was trading MARA. First of all, this stock is high risk, high reward, even for swing trading. It could, I think this move with the Bitcoin, whatever. Bitcoin moved pretty crazy. So in the comment, he said that I think he bought it somewhere right here or something like that. But notice right here, one of my criteria I said right here, right? I avoid stocks that are far away from the 50 EMA, RSI, and stochastic above 60. See right here? It's away the 50 EMA. Look at the stochastic. It's above 80 or 70. Therefore, I'm not going to trade this stock at all around this price range because it's going to fall, and it did, right? I don't care how high it go. Remember, you want a high success rate, 80%, 90% success rate. You need to have a lot of criteria that you need to stick to. You don't just trade any random stocks, right? You need specific rules and guidelines. So now it's kind of retesting this right here. First of all, this right here is known as a shooting star formation. So those don't know what a shooting star formation looks like, you can go to Google. Again, all these are free information. You don't have to buy some bullshit course from people. I don't know why people do that, buying courses when all this stuff is free. Because I learn all my stuff is free online. I don't buy any courses. Let's check out candlestick formation, candlestick reversal patterns. Just click right here. Go to image. It'll give you a bunch of image examples. And just click on this right here. See a better picture right here. See that right there? Kind of like that, right? You call it a shooting star. So you see another source, another potential source. Like, I think, let me see. There are so many sources. Look at all these pictures. And it's all free. You don't have to buy these. I don't know why. I don't know why people buy courses. It's so stupid. Sorry for you, but for those to buy courses, for my honest opinion, you're just wasting your money when all this stuff is free. Okay, let's see. Yeah, you can call whatever you want to call it. I think it's a shooting star. It's just a fancy name. What it is, let me show you this one. What it is, it's a stock going up. Show a little red pin bar or doji, whatever, followed by a big ass red candle, like it did. Let me find one more. Let me see. This one? Yeah, close enough. So, green candle, followed by an inverted hammer or a doji. Now this is very important right here, the next candle. This candle is very important, the third candle. Okay, so let's zoom in. This red candle is somewhat important. This candle is very important. This is the signal right here. This right here is a confirmation. We need 3 candles in terms of confirmation. I think I covered that in my last video. This is signal candle. This is a confirmation candle. Now the rest is this follow through. Right? This right here is a signal. Notice right here is an inverted hammer. It's a hammer, but it's inverted to the top. See how far it is away from these moving averages? Especially right here. There's a gap right here from this moving average to this. The farther away, the better. Now notice here, as the stock opens, right? It opens right here. Dang, it's kind of hard to see because it's so small. Then it got pushed up. Buyer stepping in. But guess what? Seller is also stepping in more than buyer. So it pushed the stock down and it closes below right here. So that's why it created this inverted hammer. The next day, look at this big red ass, big red candle, right? That's a huge sign. Okay, you better short this or exit. So now it's going back down. So now it's retesting this 50 daily EMA, or getting near there already, almost near. So let's say you buy it here, right? And you're asking me, how do I minimize my loss? Well, if you are swing trading, you must buy small right here, right? So you're maybe like around $40 because that's near the the moving average is at. You do not buy when it's far away from the moving average. If you have to buy, again, this doesn't fit any of my criteria, but if you have to buy and want to get in, I will wait for these moving averages or stock price hit this key level, and I will buy increment. Eventually, you gotta cut your stop loss, right? For this stock, I definitely have a stop loss because this is too damn risky. Like I said, this stock is high risk, high reward. More high risk, high reward than this stock right here, right? Agreed? It's Johnson and Johnson. Come on, man. Right? Look at the big picture. For the past, I don't know, 20 years, 30 years, 40 years, 50 years. Look at that. It's uptrend. You see what I mean? There's no way you can lose in this stock if you size it correctly and you enter at the right price. You do not buy when the stock moves far away from the 50 EMA, like I said right here, in red. Is it in red? No. But, right here. Right here. Second step. Again, I'm just kind of repeating myself, but yeah, that's the process, right? Like right here, you see how far away from the 50 EMA? Look at the stochastic on RSI. It's above 70, right? Just like I mentioned right here. Avoid stocks that are far away from the 50 EMA, daily RSI, and stochastic above 60, right? That's why I did not buy Johnson & Johnson when it's right here. See? Failed the criteria already. Although the big picture is uptrend. I buy when it's retracement. You don't want to buy impulse. That's called chasing. Or it's just a fool's game, right? You buy a high price and you sell it to a higher fool that's willing to buy a higher price. Kind of like right here. You see that? Right? Stochastic RSI is kind of high. Way move far away from the 50 EMA. Don't buy it. If you buy it, good luck because you'll be stuck in there for a long time. Because, yeah, you pretty much stuck there for like half a year or so. That's lucky. Some people stuck in for years and years or several quarters before they can get out because the stock go back down. That's why you don't want to buy when it's when it's too far away from the 50 EMA. RSI stochastic is above 70. Right now, RSI stochastic below 30. It hits 200 moving average. Dude, I'm gonna start my position just like I mentioned right here. These criterias. If you follow these criteria, I don't see why you can lose from swing trading. There's no way, you know. Okay, I think this video getting a little bit too long. So I hope this video helps the whole entire thought process, how to find a stock to trade and stuff like that. Okay, see you guys in the next video. Bye.